Hi everyone, I hope you're all doing well, and today we'll talk about Inmode stock and if it's the time to go buy Inmode. This is a question I got about from you guys for a little bit because I think you guys know that I bought into this company, and I've had quite a few questions about just, giving it its own video, as well as giving it its own video like my thoughts on the current share price. Obviously when I bought the stock it was a little bit lower. I think it was up 20% on the stock, but I think it's pulled back a little bit recently because of the stock market pulling back in general. But I'm still up quite a bit on the position, but people are, still asking me what I think about the company. Can it have its own video? And even at these prices right now, is it really a good opportunity to go buy into this company? So I'll take a look into it. And all I need to do, guys, is smash that like button and we'll get started. So Inmode, ticker symbol INMD, currently trading at about $34 of recording this video. And it is quite a recent IPO. It came on the stock market in 2019 and it closed at $27. And then after its IPO, towards the end of 2019, this stock actually was a $50 stock. And then since being about $50 stock in 2019, it's kind of been a bit, it came back a little bit and started to recover in January time. And then obviously we had the COVID situation come in, and which left the stock to pretty much half its share value, all the way down to $15, which is a massive drop. And since about its COVID lows from about $15, it's been on a really good run. The stock's actually gone from its COVID lows up to about 130% to where it is now, which is $34. So we can see there was some good golden opportunity to get this stock after its COVID drop, and obviously it's still below where it was, in early 2020. So it's still on a bit of a discount. We're still sold off about 20-30%. So even though the lows have kind of passed, it's still not, massively, we're not totally missed the boat on this one. When we look at the company itself, it's a company at 1.2 billion market cap, so it is a bit of a smaller company, not crazy small, but a bit smaller than what we are used to talking about. Companies like Huya or Dropbox, Pinterest, they're like 20 billion companies. And you can see here it is profitable because it's got a PE, so it's got 28 PE, which actually when we look into what you'd say is pretty bit of a high PE, but when we actually look into what the company does on growth value, that won't seem too bad, especially when you look at a forward PE as well, because obviously it had pretty much no income over the kind of April, May, June quarter. The only income it got was in June of that quarter, really. So it's got a bit of a COVID PE, so it would be a bit lower if it weren't for the COVID situation. But like when we start looking at forward PE, and the forward PE drops all the way down to like 22, when we take a look at the growth, it'll actually look fantastic. So if you're going to buy into this company, I always say read the annual report. Actually listen to the conference call. If you listen to the conference call for the last quarter, it was a very good conference call. I learnt quite a bit about the company from that one, as well as the management team being a pretty decent management team. Like I say, previously they came out in that quarter, said that they basically didn't put any staff off on like furlough, kept them all on. In fact, they hired staff as well. They made sure that when it kind of calms down, a lot of their operations are in the US, so the kind of US has kind of like gone back to normal now, that they'll be able to have a pretty decent, July, August, September, so Q3 should be okay for them. And even though they kind of only operated in 1 month for that quarter, the revenue was still okay and the profit was fantastic. This company historically pulls in, fantastic profit margins, like the like 85% profit margins on the company, which is fantastic, which normally says that there isn't much competition out there. Now the company has a lot of different machines, what they do. So this company is basically in the cosmetic industry business. So what it does, it has a lot of machines that will help improve different things to do with your body. So a lot of the main thing that they were focused on, and like I said, there's different machines and they're always working on bringing out different machines to help with different cosmetics that they do have, and a few of these technologies are patents as well. But there's a lot of different machines, and I won't bore you by going through every different machine and every kind of like before and after photo. You guys can find all this out in the investor relations report. But basically they've got a lot of machines that help with cosmetics, skin conditions, sometimes it's like helping to remove fat. But normally, like historically, you would have to go for surgery for a lot of these procedures, which obviously is expensive, you have to be put to sleep. And it's a lot of hassle, and where Inmode have come in is for a lot of these kind of surgeries. Obviously on the skin conditions and hair removals, it's kind of a little bit different. But like on what they do is they've got technology which basically helps remove fat through like burning through fat tissue. So they get a machine, put it on you. You go there for treatment for an hour or two, and then they heat up all this fat tissue and they can burn it. They can move it to different parts of your face and kind of like level it out. So like I say, normally you would have to go for surgery, put to sleep, they would have to cut into you, you have scars. Something like this, it's a nice quick treatment that you just turn up for, go home. And I think it really appeals to people, not wanting to, go under the knife to have all this done and be put to sleep. And I think as well, when you think about the cosmetic side, it's a kind of industry that's, I think, still got massive legs to grow, especially when you think about the kind of world that we're in right now. People always want to, look good. People are, I think, generally getting it at a younger age, and especially in the society of Instagram and stuff like that, I think that it's definitely something that, and I think a lot of the younger generation coming through will definitely, the products that Inmode have will definitely appeal to them. So it's an industry that I think will carry on growing. I think the company itself are bringing decent or more machinery out to help with different cosmetic side of it as well. Management have done a fantastic job, and I can see Inmode doing really well over the next few years, especially because they're just in the US basically. They're looking to expand into other countries like China, some European countries. So when you think about this company can go worldwide, that's obviously just going to help the company as well, isn't it? So when we take a look at the company's financials, we can see that previously from 2017 to where they are now, revenue has grown at a massive rate, and we've got some fantastic revenue growth here on the company. And also on the profitability front as well, you can see the company has just ramped up profitability going forward. We can see there's going to be a slight slump because of the COVID situation, but I actually think that Simple Wall Street have these figures wrong. I don't think the slump is going to be that bad, because I think the US is kind of getting back to where it was. What we've heard from the earnings call, it seems like Q3 could be quite good for them. And then also, when we start to get the company going a bit more worldwide into other countries, we'll see some growth as well. So we're going to see revenue grow absolutely huge. So we're probably going to see revenue growth of something around 30%, which is fantastic. Especially when we go back to where that P were, and it's like a forward P of 22, and you're picking up a P of forward 22 with 30% revenue growth. Very rare to see this sort of thing. Normally a company in this sort of position would be trading at a P ratio of like 60. So it is, when you compare that P ratio to where it should be, it seems like it's undervalued. And then you factor in the growth as well. The share price is definitely undervalued at this when you look at the revenue growth and that P ratio as well. You look at the earnings are going to be growing as well. Earnings are a little bit in between. I think they could be a little bit better than what Simple Wall Street are forecasting right now. And then just to top it off, with this company, 0% debt to equity, 205 million equity, and there's 200 million in cash there, so there's no debt on this company. A big massive cash pile there, 200 million in the cash, which is fantastic. And something else as well, just to add in there, two of the biggest ownerships here are two people that do still work for the company as well, which I think is always a positive. So overall with Inmode, we can see that this company has a very bright future on it. We've got a great balance sheet. It's at a very cheap valuation. I think it's the perfect company right now when you look at what's going on. Obviously the valuation was a little bit cheaper, maybe a month, 2 months ago, but still it's not crazy expensive now. It's still not too bad. And like I say, when we factor in the growth and where this stock's going to go, you can only see the share price going up from here. So when people ask me about Inmode now and is it still a chance to go buy this company, I would say yes, even though I'm kind of up and I bought quite heavy a couple of months ago in this company. I don't know how much more I'd personally buy myself, but as someone that isn't invested in this company, from my point of view, if I put myself in the position that I wasn't invested in this company at these sort of prices still has probably 100% upside on it. You can see the growth, you can see that it's undervalued, fantastic management, very clean balance sheet, and it's what else would you want from a company? There's nothing else you could really ask for. So overall, is it a time to buy Inmode? I think so. Still a very cheap valuation, good growth. You can see where the share price is going to go in the future. So I really like this one, and yeah, I would say that it's still a buy at these sort of prices. So if you were looking into Inmode, I hope it helped you. As always, guys, you can smash the like button, subscribe if you're new around here, and I'll see you next video.